Bitcoin in 2025. A detailed analysis of institutional dynamics, global policy, and market implications. As we move deeper into 2025, Bitcoin's importance in the global economic landscape continues to expand. Institutional adoption, regulatory developments, and technological advancements are shaping Bitcoin's trajectory. While these dynamics present many opportunities, they also create complexities that require careful analysis. This article will examine key topics such as MicroStrategy's aggressive accumulation strategy, China's regulatory environment, and broader implications for the cryptocurrency market. MicroStrategy's Bitcoin strategy, risk and reward analysis. Plan 21 ambition. MicroStrategy has redefined corporate treasury management by adopting Bitcoin as its primary reserve asset. The company's Plan 21 sets ambitious goals to raise $42 billion over 2 years to purchase 1 million Bitcoins, representing nearly 8% of Bitcoin's total supply. The funding plan is split between $21 billion in equity and $21 billion in debt, underscoring the company's belief in Bitcoin's long-term value proposition. While bold, the strategy poses significant risks. Market volatility, regulatory hurdles, and liquidity concerns could strain the company's financial stability. However, MicroStrategy's success could validate Bitcoin as the company's treasury standard, spurring broader institutional adoption. A recent SEC filing revealed plans to expand MicroStrategy's Class A shares from 330 million to 10.33 billion and its preferred shares from 5 million to 1 billion. This significant increase in authorized shares provides flexibility to fund acquisitions but raises concerns about shareholder dilution. With MicroStrategy's stock up 420% by 2024, investor confidence appears strong. However, sustained market support depends on Bitcoin's performance and the broader macroeconomic environment. Institutional dominance. The risk of concentration in decentralized assets. Bitcoin's changing ownership landscape. Bitcoin's decentralized nature is facing challenges as institutions like MicroStrategy, BlackRock, and Fidelity accumulate significant holdings. Collectively, these entities could soon control millions of Bitcoins, creating systemic risks similar to those in traditional finance, such as market manipulation and wealth concentration. This concentration underscores the need for retail investors to remain active participants in the Bitcoin ecosystem. Wider adoption depends on education, accessibility, and policies that encourage decentralized ownership. The rise of Bitcoin exchange-traded funds, ETFs, has facilitated institutional access to the market. While ETFs provide regulated access, they also centralize Bitcoin custody among a small number of large custodians, potentially undermining the decentralized vision of the asset. China's regulatory stance. Capital controls and Bitcoin adoption. China's strict capital controls are aimed at curbing capital flight and stabilizing the yuan. Restrictions on foreign remittances, capped at $50,000 per individual per year, have driven wealthy citizens toward Bitcoin and other decentralized assets. China's over-the-counter, OTC, Bitcoin markets are expected to process $75 billion by 2024, reflecting growing demand. Bitcoin's borderless nature offers a unique solution for individuals and businesses seeking financial autonomy in a restrictive environment. Economic stress and global spillover. The Chinese economy faces structural challenges, including over-leveraged real estate sectors and slowing population growth. Major collapses such as Evergrande highlight the vulnerability of debt-driven growth models. These economic stresses contribute to Bitcoin's appeal as a hedge against systemic risk. If China's turmoil persists, its impact on global markets could accelerate Bitcoin adoption among retail and institutional investors. Technology and regulatory trends shaping Bitcoin's future. Bitcoin's scalability has long been a matter of debate. Layer 2 technologies, such as the Lightning Network, aim to address this issue by enabling faster and cheaper transactions. These improvements could extend Bitcoin's utility as a store of value and medium of exchange, driving broader adoption. Bitcoin's success depends on navigating complex regulatory environments. Countries such as the United States and China have adopted contrasting approaches, ranging from heavy oversight to outright bans. A global consensus on a regulatory framework could promote Bitcoin's legitimacy while preserving its decentralized nature. Lessons from history: capital migration and alternative assets. Historically, individuals in restrictive regimes have used alternative assets, such as real estate and fine art, to circumvent capital controls. Bitcoin represents the next evolution, offering unparalleled portability and security. In China, wealthy citizens have used Bitcoin to move money internationally. This trend underscores Bitcoin's resilience to traditional financial constraints and highlights its growing importance in global finance. The role of mining in China. Despite talk of a blanket ban, 55% of Bitcoin's hash rate will remain in China as of the end of 2024. This reflects the economic incentives of mining, especially in areas with cheap energy. China's nuanced stance, restricting retail use while allowing industrial mining, demonstrates its recognition of Bitcoin's strategic value. This duality will likely influence the global distribution of mining in the years to come. Bitcoin's role in the changing economic paradigm. As global economies grapple with inflation, Bitcoin's fixed supply positions it as a deflationary asset. Its adoption as digital gold continues to grow, offering investors a hedge against currency devaluation. Bitcoin's trajectory predictions. Key trends shaping Bitcoin's future include: 1. Institutions like BlackRock and Fidelity will expand Bitcoin's reach through ETFs and custody solutions. 2. Countries facing economic uncertainty may adopt Bitcoin as a reserve asset. 3. Wider education and accessibility will drive individual adoption, countering institutional centralization. Strategic recommendations for stakeholders. For retail investors. Retail investors must take proactive action to ensure their place in the evolving Bitcoin ecosystem. Strategies include: diversify portfolios to include Bitcoin, a leverage dollar cost averaging to reduce volatility. Prioritize self-custody to maintain control of assets. For policymakers should strike a balance between fostering innovation and mitigating risk. Recommendations include: establish a clear regulatory framework. Encourage financial literacy to democratize access. Support decentralized technologies to ensure fair competition. For institutions should responsibly adopt Bitcoin by adopting transparent custody and regulatory practices. Prioritize long-term investment horizons over speculative returns. Cooperate with regulators to align with evolving compliance standards. Bitcoin's journey into 2025 reflects its maturity as a financial asset and its potential to reshape global systems. While opportunities abound, challenges such as centralization, regulation, and accessibility require collective action from stakeholders. By understanding Bitcoin's role in addressing economic vulnerabilities and leveraging its technological advances, investors and policymakers can effectively navigate this transition. Bitcoin's ability to empower individuals, challenge traditional systems, and foster innovation solidifies its position as a cornerstone of the future financial landscape. As the ecosystem evolves, a balanced and comprehensive approach will be necessary to realize its full potential. Bitcoin's potential to transform global finance continues to grow in tandem with its adoption. As 2025 approaches, it is increasingly clear that Bitcoin is not just a speculative asset but a key component of an emerging financial paradigm. Organizations like MicroStrategy are at the forefront of this shift, although there are risks that require careful consideration. Meanwhile, countries like China are highlighting Bitcoin's resilience in restrictive regimes, emphasizing its role as a tool for financial autonomy. However, the path forward requires balancing decentralization with scalability and regulation with innovation. Layer 2 technology, improved education, and inclusive policies can empower broader participation. For investors, self-custody and informed strategies remain important as Bitcoin matures into a global asset class.